The employee retention credit, the IRS, probably a lot of reasons not to pay attention to a video. But here's the deal. If you have received money through the employee retention credit process through COVID, and you're 100% sure that you can survive an audit, then go ahead and stop watching. But if there is a question in the back of your mind that an audit might catch something, the audit's coming. We can almost guarantee it. According to Cilley, who joins me. Stephen is the CEO, the founder of Ataraxis, a professional employment organization. And this conversation, Stephen, thanks for joining us, really stems from a lunch you and I had, and your passion behind this topic and a very narrow window of opportunity for businesses is here. And so that's why we're going to talk through this. So let's start at the very beginning with the employee retention credit, which the IRS now says is being utilized as one of the biggest scams that they've seen in the last year. So what is that for businesses, and how big of an issue is this?
You bet. First, thanks for having me on, Dale. It was good to see you at lunch, and it's good to have this conversation. It's one of those that I think that it is a topic that people don't know enough about. And the retention credit was part of the COVID era recovery plans that were put in place back in 2020. There were three programs. There was the PPP, which many people took part in. It was a program designed to borrow money, but at the same time, then it was legitimate to keep your employees on, and you used all the money to pay for your employees, health insurance, some other things like that, then it was forgiven. It was a great program. It was designed to be given and forgiven to the employer. The ERC was the second program, and that is the employee retention. At the time, it was the employee retention tax credit. And if you didn't qualify for PPP, this gave you another resource to be able to apply for funds to help pay for your employees to keep them on. And so you had to retain the employees. And then if you did, you would get a credit up to $26,000 per employee for the taxes the employer paid on that employee. And the employer taxes, just so everyone's clear, the only taxes employers pay are FICA taxes, Social Security, Medicaid. There is no federal taxation on a business or anything else. It's only on FICA wages. And so this is a Social Security, Medicare credit that comes back to the employer. So the only place the money comes from, or should come from, is Social Security fund, which is another problem in itself. And then the other thing was you could defer your taxes. So the third program was you could defer your taxes, saying, hey, let me pay these later on, basically borrowing money from the feds to not have to pay your taxes and then pay them later. All three programs were designed to help in the COVID era for 2020 when 99% of everything was affected. Very few places had any shutdowns or closures in 2021. So these programs originally had ended. The issue became when Secure Act 2.0 passed, and for whatever reason, there was one congressperson that really pushed it. They decided, and Congress decided, hey, we should try to help businesses even more and extend the program into 21. And so it became then a situation where the program was, it's extended, and if you qualify only by having a decrease in revenue, which would be 50% from the same quarter of 2019, or in 21, it was 80%, which makes no sense, but 80% of the same quarter in 2019. And so you're looking at this, and you need to have a revenue decrease. That's the first most legitimate way to qualify for this program is that. The other is a government shutdown, or supply chain interruption is actually what it's the other deemed way to qualify. However, the issue with that one, and this is where it really gets kind of tricky, is most of these, most companies during COVID, if they needed it, they applied for this and they got their funds. Where the problem became and where it started was when they extended the program into the next year is when these companies started picking up, hey, wait a second, look at this money that these people can receive. They don't know about it. We need to tell them about it. And that's where you started seeing these advertisements for the ERC and qualifying and applying for the ERC and come get your free money from the government and all the different things that they were saying. And you've seen celebrities advertise for them, and you get phone calls. I get probably 4 or 5 a day. At the height of it, I was getting probably 10 a day. And the emails constantly. I was even getting texts. So they were all over pushing, saying, hey, apply for this money. It's yours. You should get it. You qualify for it. The problem became is that any business that had a revenue decrease and it really struggled that way probably knew about the program and was already applying for it and doing it. Where these, what the IRS calls the ERC mills, are these companies that call and push and convince you that you qualify for this when you truly don't. And the way they do that is on the supply chain. Because what they'll say is, oh, you had supply chain interruption, supply chain interruption, and then that's how you qualify for it. The problem is that there's a very specific guidelines around that, and this is where people get stuck. If you did not have any supply chain interruption that was caused by the government shutting something down, you don't qualify, which means most people don't qualify in 2021. And that's where people are really getting stuck, is because there are very few, there were maybe a few cities that shut something down, but it wasn't a straight across the board shutdowns. And so supply chain, IRS even says there are very, very few cases where supply chain will qualify for a 21 claimed credit.
I was going to say an important point in thinking about this, because I don't want people to get caught up in, well, that was 2021. It's a long time ago. But what you told me over lunch was that the IRS has retained a 10-year audit privilege to go back and look at what happened.
So that's where this comes in
these cases.
You have to use that period of time. So 2021 is the judgment time. So I'm looking at it from the second quarter of 20. So second, third, fourth quarter of 20. First through fourth quarters of 21 are the time periods that you have to judge whether or not you qualify in that time period. Then they'll take the amount of pay that you had and taxes that you had in those time periods or credits or quarters that you're claiming, and they'll calculate your credit. And so that's how they get to up to $26,000 per employee is over that period of time. It could be that. The issue becomes, now I'm filing for it now. So it's 2024. For any claims, if the program doesn't get changed, so there's a good possibility that Congress is going to change the program. But if the program doesn't get changed, you have, a business owner has until April 15th of 2024 to file for the credits claiming for 2020. And for 2021, a business owner has until April 15th of 2025 to claim those credits. Once those dates pass, you can't claim anything for those years.
But those dates keep these mills, the scams, operating, because they can say we can go back and file for you for those timeframes. So you're still getting our businesses are still getting the phone calls,
absolutely,
making these outrageous
claims.
And
the program actually was frozen. So the IRS froze it back in September of last year. They said, hey, we're not going to take any more applications. But the problem is that they can't actually stop people from mailing them in. They can just say they put a hiatus on processing. So while they said we're not accepting any more applications, about 1 million still came in. So there's a backlog of all these things that the IRS has to go through. And so the IRS is saying, look, we originally were just going to process and pay because the program was supposed to speak for itself. But when these mills got involved, they did a cursory review in about July, August last year, which is what caused them to pause the program. And of the applications that they were receiving at that time, about 95% they could see they were either fraudulent or they didn't qualify. Like they could tell that they were claiming shutdown and that there was no shutdown. So that's why they was like, wait a second, this program's we got to stop. We can't keep taking these things and just paying this money out. And so they tried to pause it. And then they said, look, we're going to audit all these files at some point in time. Then they tried to say, hey, we're going to audit them before we pay. Problem is there's so much pressure to get the money out that they're trying to get through these applications and they can't get through them fast enough. That's when they're saying, I
want to make sure that,
go ahead,
that the businesses understand what I just heard you say was that if you're a business that received the employee retention credit, there is 100% chance you will be audited for the monies that you received out
Correct.
of that. Is that what you just said?
That is what the IRS has finally come back and said. Originally, they were like, look, we're going to audit what we feel we need to, or the bigger ones, or something like they were trying to figure out how they could make it be more streamlined. But they've figured out that there's so much fraud in this program that they're going to audit every single one. And they have said, we are going to audit every one of these. And so the original time period, and this is where a lot of people are it's not, I don't want to say they're misleading on purpose, but there's a misunderstanding of what the IRS would normally do versus what they've put on this program. And so what they've said on this program is that we're going to audit every single one of these files. It's 3 years. The original statute and the rule they work under is 3 years from the date of the credit. The problem is that the credit, some people are saying you have until, if you file before April 15th of 2024, they won't be able to audit after that date because it'll be 3 years from that time period that you're claiming. IRS has said, no, it's not the time period you're claiming. It's 3 years from the date we cut you the check. And that's if we don't suspect fraud. So this is how it normally works. If they suspect fraud, they can go 5 years. The IRS has come out and said, we can actually extend this to 10 years if we deem the program to be that way. And that's what the IRS has said. Their intent is, we're going to audit every single one of these files. And so if that's what the IRS is saying, then people need to understand that you're probably not going to get away with this. Even especially if it's fraudulent, you're not going to get away with it. But if you don't even know it's fraudulent, if you're not sure, and your opening was great, Dale, because it's like, look, if you're not 100% sure, you need to either send the money back or put the money to the side. Because what's going to happen is, after they've given a forgiveness program, as you mentioned, and the forgiveness program means that you can, with no questions asked, if you've gotten the money and you're not sure you deserved it, you can send it back to them with no penalty, no questions asked. If you have not received the money and you filed, but you're not sure you will actually claim it or qualify for it, you can then send in a 941X saying, hey, withdraw that claim that I put in. I don't want you to process it. So the IRS has said, if you do that before March 22nd of this year, there will be no penalties, no questions asked. You can walk away like it never happened. If you do,
March 22nd, 2024, yep. That's an important date for businesses.
About 4.5 weeks from now. That's what a business needs to do if they're not sure they qualify. Because if that date passes and you get audited by the IRS, I think the example that I gave you, and a lot of people don't understand this as well, and it's unfortunate, is that I'll use the example of, I'm told by a company that I hire, that advertised to me, that I qualify for $500,000 in ERC. All right. In that situation, $500,000, most of these charge 20%, these companies. So you're going to give them $100,000. At that point in time, you have $400,000 left. However, you have to pay taxes on it because this is now income to you. And so let's just assume most businesses at a $500,000 level, and most people are going to be in the highest tax bracket for the feds and the state. So let's just go average 40%. So you got 40% off of there. There's another $200,000. So now the business owner is left with a net of $200,000 on a $500,000 refund. Well, with that refund now at $200,000, I have got my $200,000 and I think I'm fine. IRS comes and audits the file and says, hey, guess what? You qualified, but not for $500,000. You qualified for $200,000. And since we had this program, this $300,000 that you did not qualify for has a 20% penalty on it that they've attached to this program. So you owe $300,000 back and 20%. So you're at $360 plus interest from the day they wrote you the check for the $300,000. So figure, let's say it's 3 years from now, you're probably going to owe around $380,000 to $400,000. You had net $200,000 because you already paid taxes and you paid the company that did the calculation and got you into this mess. Well, you're not going to get that 20% back from that company. They're long gone. The taxes, you can refile your taxes and get the money back off the taxes that you paid. So you can get that back and you'll only owe taxes on $200,000. But what you're going to get back, you're not going to net out $360,000 or $400,000. And so a business owner is actually better off not filing for this if they don't believe they qualify, because you're going to end up out the money. My concern and the passion that I had for it at lunch when we had lunch was I believe this is going to be a big giant mess for business, small business and medium-sized business in 3 to 5 years as the IRS processes through this, because they also there's a personal guarantee on the liability that the business owner has on this because it's FICA taxes. And so you're not going to just be able to bankrupt your company and walk away from this. And I believe that there's going to be a big problem for business owners and businesses where the IRS their job is to get the money back. Congress has to change this rule. Now, people are trying to say that, oh, we're going to bank on Congress, putting a forgiveness out there, just like PPP. Well, I hate the analogy of the PPP and the ERC because they're not the same program and they weren't designed that way. There was zero reason for there to be any forgiveness in the ERC program because it wasn't designed that way. It was designed to be, you qualify for this tax credit because you qualify. But if you don't qualify, you shouldn't get the money. So why would the IRS forgive everybody for getting money that they don't qualify for? Just because they got duped? It doesn't work that way. And Congress would have to actually forgive, and there is no appetite for them to forgive this because it's too huge of money. It's dollars, billions of dollars out the door that, you got Social Security that they came out with a few months back that said it's going to be bankrupt in 10 years. Why are you taking more money out of Social Security if it's going to be bankrupt? The program really should have never been extended, but it definitely needs to be ended.
So for the business saying, okay, you've got my attention, what do I need to do? You've got until March 22nd of 2024 in order to either give back the money that you have with no questions asked, no strings attached, or if you've got an outstanding application that one of these mills led you through, you can go ahead and file the appropriate form to stop that. That's what needs to happen right now.
And so what I would tell you is that if you don't know how to do that yourself, get with your payroll provider, get with your accountant, get with someone who can help you file the appropriate form, which would be a 941X for the quarters that you claimed that you're returning. Basically what happens is you file a 941X for the quarter, and then to get the credit, you claim a 941X saying, hey, here's the credit that we calculated. So when you file a 941X to do that, basically what you're saying is that, no, I don't want that credit, so I'm readjusting the 941X that I filed before to get you back to where you were before you filed it all. So that's why when you look at it, the mounds of paperwork that go into this is why the IRS is struggling to keep up with it, because most businesses file by mail. So you've got piles and piles of mail that they have to go through. If something doesn't look right, they're going to set it to the side. So you end up in a situation, if you're the IRS, if you've got more to do than you have time. So we just have to extend things because you're not willing to give a forgiveness for something is rampant with fraud, like billions. I would say there's more money been applied for that's fraudulent than was actually qualified money.
Well, that number, 95% of the applications reviewed back in the middle of last year were found to be fraudulent.
Yeah, that was just a light review. That was just let's look at these, and that's why they're like, time out. We have to stop. So the program was, and this is where I go, what they did during COVID, we can't, look, hindsight's 2020, and you can say you shouldn't have done this, shouldn't have done that. Those three programs at the time were good programs, but this particular program should have never been extended. And the way that these mills are talking about it, like I got a multiple emails saying that's PPP 3. It's nothing close to PPP. It's not PPP, and it's not going to be forgiven. So if you didn't already know about the program or file for it or need the money at the time, you should walk away. It's just not anything that you really should participate in, because you're probably just going to get yourself in a bad situation later on. And I don't know many business owners who are going to be able to absorb a hit of that much money at one time, because once you get the letter that says you owe this with the penalty, you start incurring failure to pay penalties within 10 days of that, if not paying that balance back. So not only do you have a situation where you can't afford to pay this back at the time, penalties are going to start racking up at about, I believe it's 0.5% a month on the unpaid balance. So it's going to rack pretty quick. And so you're going to have all these people who are strung with, debt to the IRS because they shouldn't have gotten the money in the first place.
Well, you have given us, you've sounded the alarm. So our job now is to get this in front of as many people as possible. I'll ask folks, if you're watching this on YouTube, give it a thumbs up, share it inside your circles, wherever you're at, inside your industry associations, hit the share button on this, get the information out, because we don't want to see a small business implosion in 3 to 5 years because millions of businesses took billions of dollars that shouldn't have been made available because of these scam mills. That basically boils down to what we see happening on the horizon based on the numbers we're looking at right now.
Yeah.
So Stephen Cilley, thank you so much for making time to sound this alarm, and we appreciate that. And it's our job now to get this information out to as many people as possible.
Yeah, and if people have questions and I can help with anything, let me know.